Good evening, everyone. On behalf of Kiran Advisors, I welcome you all to the virtual conference call of Laxmi India Finance Limited. So, from the management team the call will be addressed by Mr. Deepak Bed, the Managing Director, Mr. Gopal Krishan Sen, the Chief Financial Officer, Mr. Kuldeep Singh Sikarwar, Chief Business Officer, Mr. Piyush Somani, Chief Treasury Officer, Mr. Saurabh Mishra, CS and Compliance Officer. Now I hand over the call to Mr. Deepak Bey. Over to you, sir.
Good evening, everyone, and thank you for joining us. This is a very special occasion for all of us at Laxmi India Finance Limited as we connect with you for the first time after our successful listing on 5th August 2025. On the eve of our National 79 Independence Day, it is a proud and humbling moment to reflect on how far we have come and share our progress with you. Tomorrow, as India celebrates its journey of freedom and opportunity, we take pride in contributing to that story through financial inclusion, entrepreneurship, support, and customer focused lending. Let me briefly take you through who are and how we have built this journey. At this core, Laxmi India Finance Limited is a non-banking financial company dedicated to providing tailored financial solutions. Our primary focus is on empowering micro, small, and medium enterprises and support the construction sector, which together consists the largest portfolio of our profile. We also have significant presence in vehicle finance and offer personal loan and business loan to meet the diverse need of our customers. Our 98% book is secured either by the collateral, residential or commercial, or a vehicle with a HPN. Our operations are spread across 5 states: Rajasthan, Gujarat, Madhya Pradesh, Chhattisgarh, and Uttar Pradesh. With a network of 159 branches, we are committed to extending our reach into semi-urban and rural market, leveraging technology to enhance efficiency and ensuring robust asset quality, which is hallmark of our institution. In a financial landscape that is evolving rapidly, the ability to adopt, innovate, and create sustainable value has been essential to our success. At Laxmi India, we have remained committed to exceeding expectations by continuously improving and striving for excellency. The trust, insights, and feedback from our stakeholders have been invaluable in guiding our strategic direction, helping us respond to challenges effectively and capture non-opportunities. The financial services sector is becoming increasingly interconnected with banks, small finance bank, NBFCs, and fintech working together in new ways. Our strong positioning with this credit ecosystem, supported by deep relationship and robust technology capabilities, enables us to expand across segments and geographies, strengthen our portfolio, and managing risk efficiently. The past quarters was significant for us, not only because our listing, but also because we achieved record profitability, grew our asset under management, expanded our branch network, increased our employee base, and increased our geographical presence. These results are testament to our clear strategic focus and tireless effort of our team. I want to thank every member of Laxmi India Finance for their commitment and resilience, and to express my gratitude to our investors and stakeholders for their continued confidence. If I talk about little bit about about myself, so one second. So this journey started in 1993 with by my father, Shri Tej Karanji Bair, and he has started this journey with name of Deepak Finance and Leasing Company. This was a proprietorship firm. This was totally a vehicle funding company where we used to fund new and old vehicle to our customers. So this business was going very well and we had a good customer base. But unfortunately, in 2001, we lost him, and this was a big demise to a family. And after his demise, I took this. I was too young that time. I was just 17 years of age, and I was in school, 11th standard, studying in school. But I took this, accept this challenge, and I managed my routine like morning to afternoon school, then afternoon to evening office, and late evening tuitions and all. So this journey continued till I complete my graduation. After completing my graduation, I start coming to office for morning till evening, and was thinking to how we, because being this is only a business of bread butter, you can say, and so how we can expand this business and take it to next level. So I joined hands with different NBFCs, with different institutes, and we plan to grow with them in more faster way. In 2011, I thought more to expand this business, so thought to expand this business in proprietorship firm was not easy. So bought this company called Laxmi India Finance Limited, Laxmi India Finlease Cap Private Limited, and merged the complete business of Deepak Finance into a Laxmi India. So this was again a new journey started, and it was very excitement was there with NBFC name and all. So slowly, gradually, we understood the process. We have made the process. We hired a professional guys, and we made
Sorry
the
to
policy.
interrupt.
Yeah.
Sorry to interrupt. Uh, I just wanted to confirm if the screen is visible. Shai, can you please confirm if the screen is visible?
Uh, yeah, now it's
Yes,
visible.
yes. Yes, sir, please go ahead.
Yeah. Thank you. So was very excited to grow this business and take this NBFC to next level. So for that, we have hired a special team. We had made the policies. We made a structure where we can grow in a very positive way, covering all the requirement of a governing bodies and taking care of all the factors that can affect the business. So we thought let's grow and open the branches and to serve customers like NIP customers. So why we call NIP these customers? Because they have less or no few income proof with them, like banking statement, the balance sheet, PAN cards. So, but they have a good income, good source of income, and they also deserve a good credit or on-time credit, so they can also grow and can be a part of a growth of a Bharat. Our customer base are like, we have a small kirana stores, sweet shops, small aluminum factories, carpenters, dhabas, bookstall, stockist. So these are the customers who are taking us loan in this tier 2, tier 3 cities of the state. And with this credit growth, they are able to expand their business and take their business to next level. So this went very well in when we started expanding in our branches, first in mother state Rajasthan. Then we thought let's grow more into other states also. because we had a very good success in Rajasthan, then thought to have some more branches across other state. Then we plan to open them in Gujarat, Madhya Pradesh, Chhattisgarh, Uttar Pradesh, and keeping this similarly, focusing on the same secured MSME customers by taking their security as a collateral and keeping LTV to 45 to 50%. Basically, these loans we are giving on a cash driven business and for the purpose of further increment of their business, where we are taking Udyam Aadhar from them. So this all have come with a lot of technology. Of course, without technology, this won't be possible. So we have a very strong techno. We can check that tech, what we are using, LOS, LMS, CRM, the HR applications, the customer application, more than the best of accounting system, Microsoft Dynamics. Then we are using iClue for collection. So a lot of such APIs also we are using, which are helping us in getting the best of a result and maintaining the TAT for the customer. So this journey was not easy, but yes, because of the good team members and with, of course, directors, independent directors, and blessing of family, we have reached to this level. So we have a very professional board members with us who are ex-bankers, are RBI senior GM retired, who are helping us and giving us a road map, and taking us into company and to us to a next level and helping us in achieving our goal. So now if I talk about our key highlights of Q1. So if I compare with Q1 to Q1 year to year basis, so we have our AUM stood for 1346 crore as compared to June 24, 1035 crores. So we are up by 29.99%. Our profit is up, PBT is up by 46% from 8.7 crore to 12.77 crore. Our PAT has improved from 45.77%, that is 6.62 crores to 9.62 crores, 9.65 crores. Our return on net worth is 14.67 and our return on asset is 2.75. Our NIM stands for 9.99%. Our return on assets stand for 2.75%. Our net worth as on June end is 268.50. Our cost of borrowing has improved from 33 bips, so that is 11.82, and our credit rating has improved from A minus to A minus positive. So our debt to equity ratio is 4.13 and net equity ratio is 3.85. Our disbursement have up by 8.03%, that is 165 crores, and our employee base is up by 1,520 employees across these 5 states. Our gross NPA is 1.28, our net NPA is 0.67, and our PCR is 47.09. We have a healthy securities with us, where the average LTV stands for almost 45%. And these all securities, what we are having is a appreciable securities. I mean, appreciable security means all these securities like land, which is residential or commercial, which we are having, are on an increasing side. So our LTV is going down on year to year basis, month to month basis, and our POS is LTV is going down. The value of our security is growing up, and principal outstanding to our customer is going down. So this gives most comfort on at maintaining the risk and high quality security what we are having. Our network is spread over 5 states, 91 in Rajasthan, 24 in Gujarat, Madhya Pradesh, 35, Chhattisgarh, 4, and Uttar Pradesh. So we have a good plans for future growth. Like still we have a presence in 5 states of Bharat, but still there are many untouched states of Bharat where we have a plan in coming years to touch and to open more branches in tier 2, tier 3 cities and serving these types of customers and taking the security as a collateral. Our focus will not change. Our focus will remain on same that we want to go for a secured lending. In my 25 of years on this journey, I have learned that secured lending is the best lending what we have done and we have achieved the targets, but because of the security what we are having and because of the secured asset. So we have a good growth plan, like for almost 35 to 40% growth we are assuming for this financial year and maintaining with the credit cost as the same and profit almost by up by 50% and opening some more branches to almost 45 to 50%. 40 to 45% more branches we are planning to open in a coming years. So this is little bit about me, about my journey. Now about my product. So we have a main product. I told that this is MSME, and second main product is a construction loan. This all product. Then third is vehicle loan. The vehicle loan stands for commercial vehicles, private vehicles, tractors, and electric vehicles. So we have a good diversified products. We are diversified on a geographical side also. Like 80% is for mother state Rajasthan. The rest is Gujarat, Madhya Pradesh, and Chhattisgarh. In the coming months, coming years, so this percentage of other states will also grow because we are growing fast at other states also. So we use a lot of technology to drive all things. It's not easy without technology. So as I told, we are very tech driven company and work hard on technology to achieve the milestone and achieving the numbers. So if I talk about why Laxmi, so Laxmi has a, we can say that we have a strong promoter base. So recently we have come up with the IPO. After that, also the holding of a promoter is on high side. The experience of the promoter is almost 25 years. Vintage of the company is very high. This vintage gives us confidence to everyone, to lenders, to stakeholders, because the vintage means that you have seen so many cycles. So which is very important for anyone in the business. So that big experience we have of seeing the so many cycles in the BFI sector and come out with all these cycles in a very positive way. We have a focused team where we are directly approaching to customers, directly lending to them, directly source. The complete sourcing is done by in-house team. Complete credit is done by in-house team and complete collection is done by in-house team. So we are very less dependent on third party. The complete networking is taken care by our own team members. We have a strong lenders. We are very much diversified. We have a PSU banks also. We have a small finance banks. So we have almost 8 PSU banks: State Bank of India, Canara, Indian Bank, IDBI, UCO. Then private banks, we have 7 private banks who are continuously lending us. We have a small finance banks, 7 small finance: AU, Suryodaya, Jana, ESAFs. Then we have NBFCs and FIs, so 21 NBFCs and FIs who are continuously giving us fund and helping us in our further growth. Now, Looking ahead, our focus will be on expanding our secured MSME and vehicle finance segment, extending our presence in semi-urban and rural market, leveraging technology for efficiency and maintaining the asset quality that defines us. With a strong balance sheet and diversified funding base and positive credit profile, we all confident of sustaining our growth momentum and creating long-term value. So, as we all know that recently we have raised the capital through IPO, which will give a company boost up and will take this company to a next level. So few points where we will be benefited. Company will be benefited, like we are A minus rated company, positive look outlook. So we have a at least we are finding at least a 2 notch up in credit rating, which will improve the rating of our company with this capital. With this capital, we will be able to expand more branches. We will be able to open more branches and serve such customers. We can add more geographical presence. We can add more geographical presence, and we can enhance our scale of operation. We can have some business buyout or acquisitions that we can do. We can improve our ratios like CRAR, ROA, ROE. We can have more lenders on board, and our cost of borrowing will go down. We are expecting at least 100 to 125 bips. Cost of borrowing might go down with us in the coming months. So these are all benefits which we are expecting in the coming quarters with this fund infusion in the company, and this will take company to next level. As we have a good branch network, we have a good disbursement source, customer base. So I think so we will be able to drive, and we will be able to give better performance as what we have committed, and that that we can show in our coming quarters with within this financial year. Now I would like to hand over to Gopal Sen. He is a Chief Finance Officer, to give some glimpse on financial. Gopal.
Good evening to all. Our interest income on June 25 reached to 67.1 crore, and quarter-on-quarter basis it increased by 39.97%, and finance cost 33.23 crore, and net interest margin reached to 33.86 crore. Other income reached to 2 crore 98 lakh, and remuneration including the directors 16.28 crore. Depreciation 0.6 crore, 0.6 lakh, 0.6 crore. Credit card 1.71 crore, and other expenditure is to 5 crore 63 lakh. Profit before tax increased by 46.67% quarter-on-quarter basis, and is to 1,276 crore. Profit after tax, including comprehensive income, it is to 9 crore 65 lakh, and increased to 45.77%. Cash and cash balance available on June 25 is 15.96 crore, and total liquidity available 73.96 crore. Our total balance sheet size is to approximately 1,400 crore, and loan borrowing as of June 25 is 1,108 crore. Share capital 20.91 crore, and reserve surplus is available 247 crore, and consolidated firm net worth is to 268 crore. Our stage 1 assets classification 1149 crore, stage 2 56 crore, and stage 3 assets is 15 crore 59 lakh. Gross NPA 1.28 crore, 1.28 percentage, and net NPA 0.67. PCR provision for stage 1 0.41 percentage, and provision for stage 2 2.97 percentage, and PCR for stage 3 is 47.09%. Our NIM as on June 25 is 9.66%, and ROTA is 2.75%. Return on equity 14.67%. Average cost of borrowing 11.82%, or yield is 21.89%, or CRR 20.28% as on June 25. LM structure, we have positive LM throughout the years and throughout the full of the tenure of the company. This is a positive sign for the company. We are maintaining positive LM. CGR, in the sense of the branch network, we are increasing with the CGR 13.74%. Disbursement growing with the CGR 33.67%. Customer base are increasing with CGR 42%, and AM growth is increasing with 34.86% CGR. Our top 10 banks is SBI, IDFC Bank, Jana Bank, Bandhan Bank, Canara, AU, Union Bank, Indian Overseas Bank, Utkarsh, and Federal. And 8.67% contributed by SBI, and second largest bank is IDFC First Bank, contributing 6.86%. And financial institution side, there is Northern R Capital contributing 9.04%, and Mass 5.95%. Another bank who is contributing top 10 is Hinduja Leyland, Manvia, AK Capital, Small Industry Development Bank of India, STFCI, Manapuram, Napkisan, and Bajaj. Thank you.
Okay, sir. So can we begin with the Q&A session?
Yes, please.
Okay. So dear participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Mr. Akash Jain, you can go ahead and ask your questions.
Good afternoon, sir. My question is regarding the net interest income. This quarter on Q1Q basis, we have seen a decline in net interest income. Is it because of rise in gross NPAs? Hello?
Hello, Deepak sir, are you there?
Yes, sir. There is some little bit of the increase of the IPA. So it is increased. So definitely it is impact of the top line.
So there is, so sorry to interrupt, but there is some background noise. I think this is better now.
Yeah. Net interest income 57 crore is definitely including jolt of the increasing of IPA, which increased by 300 compared to last year.
Hello, actually we are audible.
Yes,
Sir,
yes, you're
your
Ash?
voice is a bit cracking.
I think Akash sir voice is correct.
Hello?
Yes. So can you speak now?
Yeah. My question is like, what is the reason for fall in net interest income on Q-on-Q basis? Although we have witnessed Y-on-Y growth of 42%, but net interest income has declined from 40 crores to 34 crores in Q1 FY26. Was it because of rise in NPS?
Akash, yes, a little bit. Akash, we are audible.
Yes, you are audible, sir.
Yeah, Akash, yes, little bit dip is because of the only 10 to 15 bips high on a NPA side, but we have seen that interest income has little bit consist of that we have disbursement is on higher side. So we have raised the disbursement of 164 crore, which is 7.24%. So little bit consensus is okay, because this is a like industry little bit NPA is high, but we are confident on our NPA numbers, because we have a good security and our LTV is very low. So we believe that we will be able to cover all in the coming quarters.
Hello, Akasha, are you there?
Hello.
Yes, sir, you can go ahead.
Considering the macro scenario, which segments are we focusing now?
Our main focus is on MSME customers, where these customers take a loan from us for expanding of their business.
Okay, so it is basically a micro LAP. Am I correct?
Yeah, you can say with the average ticket size of 6.5 lakh rupees, and coming up, giving us a collateral and taking this money for expansion of their business.
Okay. So the recent increase in NPAs is from this MSME segment below, say, 10 lakhs?
It's a mix of all. So you can say that it's a mix of, we have little bit high side on the vehicle side also, especially the commercial vehicles, and little bit on MSME loans also.
Okay, so what is our expectation going forward? Like, when would the stress start reducing?
So we are expecting better results in our coming quarters. So we believe that having a good customer base, good collection process, so we will be able to collect these all cases and getting this NPA numbers to on a lower side. And this overall tightness is in the monetary instruments in Q3 has reduced liquidity in the market, which impacted in Q4 last year and Q1 this year. So basically, this monetary instruments has affected. Due to that, there is a crunch of a liquidity in the market, and that is why I think so this has come. But yes, we are very comfort situation that we will, as our 98% book is secured with good collateral, so we are comfort that we'll be able to recover these amounts, and we can get our NPAs on a below 1% in future.
Okay, and also this quarter we saw some rise in the operating expenses, mainly because of jump in employee cost. So
Yeah.
going forward also this trend would continue, or this employee cost will stabilize now?
So Akash, as I told that we are having a direct connect, we open our direct branches in our rural and tier 2, tier 3 cities of the state. So we have a plan. We plan like we open a branches and we directly connect to our customers. So this is because of that we have opened branches in our last year also almost 30. How much branches we have added? 35.
Last year we added 23.
23 branches. So 23 year branches we have added, and this year we have a plan to add almost 35 to 40 more branches in the coming years.
Okay. And in how many months a branch breaks even?
So, Akash, this could be our break even actually achieves on the of the EVM of 1.5 to 2 CR. The break even consists of the branch expenses, the employee cost,
infrastructure and running cost, and the revenue of operations at the branch level.
Okay. Okay, thank you, sir. I will come back in queue.
Thank you.
Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Mr. Jehan, you can go ahead and ask your questions.
Yeah. Congratulations to the team for getting listed. My question is, firstly, I would like to suggest that if the company can upload the presentation on the exchanges before the results and I mean before the con call, it will be helpful next time. My question is on the credit cost. Last year it was at around 1.1%. And looking at the industry scenario, I mean, we have spoken with your other peers also who operate in this MSME ticket size of less than 10 lakhs, where they are also witnessing some pain. In that light, what can be the credit cost for the current year?
For the current year?
Yes, FY26.
Yeah, so current year we are yeah, please. So Gopal will be there to answer.
Actually, credit cost range will be depend on the several factor like macroeconomic factor, portfolio behavior, collection pattern. So in March 25, it was 1.17%, and in June 25, it is 1.13%. So we are expecting it will be float between the same range.
Okay, great. And any sort of trends that you are witnessing in Q2, like in the month of July, August, how the asset quality is shaping up?
So definitely the economic factors are improving nowadays. The instruments are liberal, and the liquidity is coming in the industry. So customer repayment behavior are also improving. So definitely this will improve in future.
Right, right. Okay. And my last question is just an observation that some of the peers are having the AUM per branch at higher levels than what we have. So I think last year we were at 8 crores per branch of AUM. So any input as to how what is the level that you are looking at in 2-3 years down the line, and I think that is one of the major reasons that our cost to income is on the higher side than them.
Yeah, sure. But we have recently added number of branches. Last year also 23 branches were added. Last year also we added branches. So these incremental number of branches definitely will reduce the AUM per branch. But the optimization will happen after 3 years of opening the branch. So our branches which are more than 3 years old are having good AUM base per branch. But definitely this will also improve, and yes, this growth will not that much because every year we have a plan to increase the branches.
Fine. Great, sir. Congratulations and all the best for future.
Thank you, sir.
Okay, once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. Mr. Akash Chin, you can go ahead and ask your questions. Mr. Akash, are you there?
Yes. Hello. Yeah, my next question is regarding the recovery mechanism. In case of a default, how is the recovery process? Can you elaborate on that?
Yeah, so Akash, we have a very strong team, in-house team who's visiting the customers and getting this collection done. So we are using the application where we can track the collection, we can track the executives, and we can track the customer behavior. So here we are using different after default we have a telecaller team who calls the customers have a field team who visit the customers and collect the money, and maximum amount is collected through UPI. And because once the match gets bounced, it has to be collected either through UPI or through cash. But if you go to see the overall collection of the in a company is maximum is through now banking sector, banking side. So then if once the case is get defaults, it is visited by the field executive, and if after visiting the field executive, it has been collected by the executive, and it is the collection application is directly through is interlinked to the API through our LMS, so it automatically reflects in the customer account.
As per DRHP, I think 40% recovery was in cash. So what are we doing to improve that?
So with this, we are plan. We have a plan to do now. We are coming up with new application that is a UPI match. So now in India, maximum in transaction is done through UPI. So what we are planning is we are connecting their UPI to our UPI e-match. So that will improve our collection efficiency, and maximum collection will be done through the through UPI side.
Okay. And some of the collaterals may be in say Gram Panchayat properties, and some properties might have title disputes. So how do we tackle that?
No, so we are not accepting any. Over to you, Kuldeep. You can answer.
So we have a very stringent process of assessing the property, where the title search of engineers is happening, as well as the TSR report by the external. And then again, we are getting it vetted from. So whenever there is either in form of reported in court or maybe not reported in court, yes, at credit side also we are taking all the family companies, and also when property, if there is any dispute, then you can have a fair idea when there is a dispute or not. So we are not considering those properties where there is any kind of risk involved in such a way, and we are avoiding those.
Okay. Okay. Thank you, sir.
Okay. Participants, once again, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box.
So can we answer the chat box questions also right now?
Sure, sir. You can go ahead with that.
Yeah, sure. So Aditya Roy.
Yes, sir. The first question is from Aditi Roy. She's asking, how do you see NPAs trending over the next couple of quarters?
So we have already explained that NPA trend will definitely reduce as the monetary instruments are liberal, the trends in the industry is growing up, the liquidity in the market, so the repayment behavior, repayment capacity of the customers are increasing. So definitely this trend will lower down in future.
Okay, thank you for answering that, sir. The second question she has is, what is the current recovery rate in stressed accounts?
So currently, on a stress account, we monetize each and every account which comes into NPA. In fact, we have a separate team who monitor NPA cases and visits and do collection.
Yes, yes. Thank you, sir. I will make invite of that, and I will.
Yeah. So we have a separate team where we identify them also at different like 007. So because they are little bit more, you can say they visit the customer, they collect the amount and all. So currently the recovery rate is better as compared the last quarters. So we can say that the coming quarters will be showing the better recovery and better numbers.
Thank you for answering that, sir. The next question is from Mr. Vinod Shah. He's asking, what's the branch expansion plan for FY26 and focus geographies?
See, in the past trend, we have a strategy to open one new state every every year. So last year we have added UP, last year we have added Chhattisgarh, and so on. This year also we have a plan to increase one state, as well as we have some plan to open some 35 branches in this financial year. So approximately 35 branches will be added in this financial year.
Okay, thank you for answering that, sir. The next question he has is, how is tech helping in MSME underwriting and collections?
So our complete journey of onboarding is tech enabled, right from the generation of the lead. So we generate leads through marketing activities. Then after these leads are being generated at the CRM, through CRM these are assigned to the frontline RO, who is the relationship officer. Then relationship officer visit to the customer, collect all the information on the application. He has mobile application, and he input all the information, all the clicks, all the documents on that application. At that application, real-time basis can go to the credit manager. Then credit manager go to the customer place to visit, to analyze the income, to find out who all are in the family, because we are trying to take all the family members into the deal who are the earning members. And then after they are analyzing on the expenses of the family, running obligations. Before that, all the KYCs are being verified through Karja. We have integration with Karja, we have integration with Bureau, so all the Bureau data are being stored in the application. Then this complete case after visit, after getting the valuation from external vendor, this case being recommended to the higher authority for decision. This is also happening on system. Then after decisioning, all the agreement process, everything is and disbursement. Then the loan management is happening on LMS. So this complete journey of onboarding is on the technology. After that, we have integration with the iClue application for the collection purpose. That is also integrated with the LMS. Any single penny collected from the customer can real-time basis will be reflecting in the LMS. So the complete onboarding journey with collection, after that there is a CRM to service customer, everything is on technology based. Thank you.
Okay, and the last question he has is, any plans to enter new product segments this year?
See, we are always focused on the secured lending, and more focused on the property-backed MSME lending, which is consisting 76%, plus construction loan, which is for the construction or improvement purpose of the home, which is around 6%. So around 80%, 81% is on a secured lending. That will be the focused area. Beside that, the second focused area will be vehicle loan, and then after the unsecured is a very less, around 2% only. So these are the product line which we are having, and we want to continue with these products only for this financial.
Okay, thank you for answering that, sir. Once again, participants, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box. So we have a question from an anonymous attendee. He's asking how much free cash flow you will have now after the IPO money of 165 crore.
Cash flow will be around 225 crore, what we are having as on date. So this is cash flow what we are having, and I think so this can be deployed in a because our average monthly disbursement is almost 55 crores. So we have a good liquidity of at least 4 to 5 months.
Okay. And sir, he's also asking, this IPO money will get disbursed in how many months? Won't it increase the profitability substantially?
Yes, of course, because our average lending rate is 21.5%, and this is a complete secured book we are building it. So we are having a secured lending side with at a 21.5% is a very good, I think so, the good IR, and we are able to make a good NIM. So of course, with this IPO money, and this will increase the profitability. What we expect is almost return on equity is 15% around in the coming years.
Okay, and the last question he has is you have recurring income model and NPAs are booked as provisions. So how come income dropping quarter on quarter, even though you explained, but more clarity will be appreciated.
So we have already replied a little bit. If you want to see the disbursement, if you want to see the interest income, that has yes, have gone up almost by 35, 30 to 35% up. Exact number, wait, I have. No, interest income कितना up हुआ है? We have an exact number now. But yes,
39.97% quarter on quarter basis.
50.
39.97%.
39.97, 39, almost at 40%. There is a up in interest income. But yes, there is a dip. Showing the overall dip is because of little bit 15 to 10, 15% bips high on a NPA side. So that is a reason of a little bit dip on in total income. And little bit we know that in a Q1 is little bit slow in the industry. Second, we have recently come up with our IPO also. So we can say that the coming quarters and months will be a bit much better.
Thank you for answering that, sir. The next question in the chat box is, what is our aspiration in terms of scaling up of loan book in 3 to 5 years?
Yeah, so we have a good plan for coming years. So with this 35 to 40% growth, we are expecting in the coming years in us with this. So if with this growth, I think so within this 3 to 4 years or 3 to 5 years, will be easily touched to 5,000 to 6,000 crore AUM size.
Okay, thank you for answering that, sir. The last question in the chat box we have is, what is the collection efficiency in Q1 FY26?
It's almost 94.92% in Q1.
Thank you for answering that, sir. Once again, attendees, if you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask the questions. You can also write down your questions in the chat box.
Yes, investors, do we have any further questions?
Ma'am, I think we have covered most of the questions.
I think, Sai, I think we can conclude the meeting for today.
Okay, so thank you, Deepak sir, Gopal sir, and all the other investors who took their valuable time to attend this session. If you have any queries, feel free to reach out to us at research@kirinadvisors.com. Thank you.
Thank you, everyone. Thank you, Deepak sir.
Thank you, thank you,
Thank you.
thank you, joiner. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.